Hello everyone, this is Alejandro Cremades, and today we're going to be talking about what is the difference between pre-money valuation and post-money valuation. So there's a lot out there in terms of what is pre-money valuation, what is post-money valuation, but here's the thing. The valuation itself is super critical, especially as you're thinking about the business itself, as a founder, or perhaps as an investor. So in today's video, we're gonna break it down. We're gonna give you all the insights so that by the end of the video, you're gonna have a clear understanding of what is the pre-money valuation and what is the post-money valuation, and then why the valuation itself is so important for you. So with that being said, let's get into it. So why are the valuations so important? The valuation is super important because it's really that price tag. It's a way to really signal to the market. Obviously, the more that the business grows, the more that the valuation is going to be. But essentially, the valuation is going to send a signal to the market so that people understand what is ultimately the value of the business. So that happens again during the multiple fundraising rounds that you're going to do. Ideally, you go from seed to Series A to Series B to Series C and beyond, which are the different type of financing cycles. And from financing cycle to financing cycle, the valuation grows. What that means is that the people that hold the shares of the business, they may hold a less amount of equity as you continue to scale up and as you continue to mature the business. But obviously, the more that you scale, the hope is that the more also the valuation increases in parallel. Also on the acquisitions, basically is the price tag that they're going to be giving. That is going to be buying everyone out and really providing the returns and the cash for you, or the stock for you and for the investors that have invested in your business. So what is the pre-money valuation? So the pre-money valuation, in essence, is the value of the business before the money is injected, either from investments or perhaps from an acquisition. So it's the value of that company that has been established via one of the multiple methods to really establish a valuation, and that is pricing it for the next course of action to happen. Now, some of those methods, traditionally, you were basically calculating the EBITDA. It was like certain multiples to it. But when you are, let's say, a hyper-growth business, or you are looking at other things that are not specifically related to the EBITDA, you can find some of these options. The Berkus method, the scorecard method, the venture capital method, the first Chicago method, the risk factor summation. So what is the post-money valuation? The post-money valuation, as the name says it, is the value of the business after that investment has come in. So basically, if we were to put it into an example, let's say that the value of your business is pre-money valuation of your business, let's say it's 10 million. And you're asking for, let's say, 2 million investment. So essentially, the post-money valuation is the 10 million from the pre-money valuation with that 2 million that is being invested, and as a result, you're looking at 12 million. And that 12 million is the post-money valuation. So in terms of debt and valuation, you need to understand that typically the debt is going to be taken outside of what the valuation is. Now, there is certain cases, like for example, if you have, let's say, convertible notes that are converting into equity, that could affect the post-money valuation. Because if we take a look at the post-money valuation example, where you got $10 million value, $2 million of money that is actually invested, if you had convertible notes, obviously that 2 million is going to trigger those notes to convert into equity. So what's going to happen is that if you had, let's say, to put an example, 1 million in convertible notes that had been invested before this 2 million investment, what's going to happen is that your post-money valuation is not going to be the 12 million that we were talking before. It's going to be 13 million because you're adding that million as well. So essentially, in this case, that convertible note is going to impact the post-money valuation that you're going to have in the end. When it comes to valuation and terms, ultimately you want to make sure that you are not the first one talking, because investors are going to ask you what is the value of your business. Now, the minute that you're talking and that you are disclosing the valuation, remember, they're going to negotiate you down. They're going to always negotiate a price under. That's why even if you have a valuation that you've done on your business, maybe with a company that has helped you to do this, a service provider, you want to keep that number, that valuation very tight to your vest, because what you want to do is you want to turn it around. You want to give it back to the investor, and you want to let them do the talking first, because what you would do then is negotiate them up, not the other way around. Otherwise, you're putting yourself in a really difficult situation. The other thing is that you need to also keep into consideration the fact that having an equity incentive pool or an equity incentive plan to pay in stock to some of your employees via stock options, that is going to be required by the investor before you actually do the financing round. Typically, what I'm seeing now in the market, and obviously you want to consult this with your corporate lawyer, is equity incentive plans that go between 15% to 20%, and that's going to be of the equity. Now, again, remember to have this in place before you go into the round of financing. Otherwise, you're going to be the bottleneck. And the last thing that you want is to really hold up on the process of getting that money in, or whatever that is. So I would love to hear in the comment section below how you're thinking about the valuation process. And again, like this video and subscribe to the channel so that you don't miss out on all the videos that we're rolling out every week. And as well, take a look at the fundraising training, which is the program where we help from A to Z with everything related to fundraising, and I'll find that you would really see a tremendous amount of value in it. So thank you so much for watching.